We see bearish sentiment continuing today, and it's very much the trend over the last few days. What do you attribute that to?
Basically, it's a combination of like two factors. One, the political bickering that is in the country on the appointments of key judicial and non-judicial appointments that were made, which the Prime Minister refused and the President apparently did unilaterally. That increasing political risk is having an impact on the Kenyan market. Then if you take that in conjunction with what is happening all around Africa, in Egypt, in what happened in Tunisia, and stuff like that, the risk perception of also foreigners who have been anchoring the market in terms of activity, they've also been reducing the activity as things unfold.
Talk to us about expected events on the NSE. Transcentury planning to trade on the NSE after shareholder approval. Has the market responded?
No, not really. I think the news has actually not hit the market that much. It would be a good offering if they actually do an IPO to the market. They are a solid company. They have the proven track record to show that they're actually able to grow their funds and pay out a dividend as they go along. And we might have a better investment company to invest in than the current Amana Capital and Centum that have been having issues here and there. I know Centum grew their profits very well, which was due to increase in the shares they were holding. So the issue is, if those shares go down this year, then what does the bottom line look like? So Transcentury will be good for the market.
All right, talking about investment companies, and obviously you're mentioning Centum, which is currently the largest investment firm on the NSE. 2 housing projects that they are sponsoring both in Kenya and Uganda, and with the Ugandan initiative, there will be a cross-listing of shares into the Ugandan stock exchange. What do you anticipate for Centum just by way of growth, and how that might influence the share price?
Real estate, especially in Kenya, is a booming business. It's growing. If you look at the figures of demand and supply, you see that it is an industry that still has a future going forward. But when you now maybe look down to the cost for construction, which with the weakening shilling, with the global oil prices going up, with a drought in the country, which might also cause energy prices to go up, construction it will continue, but maybe not at the same pace because of the high construction costs. That means take up of all the buildings and everything like that nature will also reduce slightly. So for them to go into that housing project, it's a good long term, but I don't expect immediate results in their bottom line in the midterm.
Okay, we know that we're in results season, and some of the results we've seen coming through. Kenya East Africa Cables full-year pre-tax profits halved to, I won't give you the figure, but I think somewhere in the region of 258 million shillings. The bearing on that stock, and what are the problems? Apparently some problems with regards to their unit in Tanzania.
Okay. Strange enough, believe me, their stock went up by close to 26–27%, even after announcing such kind of results, which raises a question on Kenyan investors or investors in large. Was buying a company 30% premium on their traded price, and their profits actually came down, is a bit questionable. They had an impairment loss on bed debts, which was actually huge, close to 230 million in Tanzania, which is a bit worrying. But my main concern on East Africa Cables is their strategy on costs. Because if you look at their turnover was around 3.6 billion, they ended up with an EBITDA of 632 million. So in essence, they spent 3 billion shillings to make 630 million. The cost of copper is expected to go up by close to 60% this year. Oil prices are up 15%. Kenya shilling is down 1.5%. And all those factors will really head into their production cost, input costs. So, yeah.
Okay, with soaring commodity prices, you refer to copper. We've also seen phenomenal rises in the price of coffee, which is one of the elements of the Kenyan export market. Prices up in the region of $1,022 per 50 kilograms. There are concerns as to the impact of rising commodities on the pocket of the consumer, but also on the shilling-dollar exchange rate, given that Kenya is a net exporter of agricultural products.
It is a bit of a tricky balance, because if you look at 75 to 80% of the Kenyan imports is oil, and the oil price is rising a bit faster than the commodity prices that we are exporting. You mentioned, nice that you mentioned coffee. Coffee last year, their production kind of slumped down. So you find that slump down in production is covered by the rise in prices globally. So it's more of in an even break-even state. Pressure on the Kenyan shilling will remain as long as they are still heavily reliant on importing oil and capital goods. So the balance of trade it keeps on widening. So that's what will hurt the shilling most.
Okay, talking about the shilling again, we've seen slight appreciation, but generally there's been a lot of corporate demand for US dollars, which has had a bearing on the currency. We're seeing the government now issuing treasury bills. The 182-day paper is due to be auctioned. The bond yields look pretty good, somewhere in the region of 2.78%. The government also wants to launch a 30-year savings development bond. Is the market ripe at this stage?
Yes, with the Nairobi Stock Exchange, which is not really giving good returns, like down 2% year to date, you find people tend to the next best thing. Many people bent their fingers in 2008 when the market slumped, and the market has not started that well. And even with the earnings season coming near, and the activity is still not picking up, most people actually turn to government paper. A 30-year bond giving you 12%, it's guaranteed. So you'll find either oversubscription or full subscription on government issues, and they need the money. So people can actually bid competitively, as you have seen treasury bill rates going up. So competitive bids are going to come in as people try and edge and get a higher yield.